Go ahead and type a yes on the chat. Make sure that you're able to listen to me. Fantastic. Thank you for that. All right, so let's get with it. Let's get started here. Hope you guys had a nice weekend. All right, so let's begin with the disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade, and Vantage does not guarantee the accuracy or reliability of the information provided herein. All right, let's take a look about your host. I'm Gio Benacourt. I'm a senior VIP market analyst, market educator, and demonstrator of strategies with Vantage. I have over 20 years of experience as a commodities trader, and I hold a Series 3 license and also CMT candidate. So what are we looking at to doing on our daily agenda? We look at the economic calendar to see what could be driving the market's volatility, what's moving the markets, and we're coming in to identify those key and support levels, resistance and support levels on a daily chart and on different time frames. And we'll look at doing some trading with Fibonacci tools and other tools from time to time as well. All right, about Vantage real quick. Well, we know that Vantage offers over 1,000 instruments. We have over 100 plus chart patterns, technical indicators, and tools. And we trade, Forex CFDs, index CFDs, share CFDs, commodity CFDs, and cryptocurrency CFDs. And what we stand for: lightning fast execution, award-winning 24-hour support, and intuitive tools. As a personal note, I always like to look at to identify clear, consistent trading habits, and those will develop a daily routine. And one of those daily routines, we are looking to do perhaps between 15 or 40 trades per week. So depending on, obviously, on your risk capital, on the market's condition and things like that, you always want to keep not over trade, right? And for time and simplicity, perhaps you take a look at deciding to trade the stocks, CFDs and stocks, or commodities, which will be the case. You want to be comfortable with the prospect of losing money if the market goes against you. When we come up and emphasize risk management, I like to think always in percentage wise, because that helps your psychology contain your psychic when you talk in percentages. When you speak about dollar wise or pounds wise, that's when things get scary. So I always like to talk about percentages wise. So if you have a 10,000 euro, dollar, pound account, each trade you should be looking to risk between 1% and 2%, and always looking to obtain 2 to 3 times. So if you risk 100, you're looking to make $200-300. So at least double what you're looking to risk, right? That's one thing. And then obviously we want to be able to control the volatility. You may want to change the spread or the leverage on the account when volatility spikes. And you always want to have a use of stop loss, because this will help you control, which is basically when we have already our define our path, identifying the trends, timing entry and exit points. We have the risk management and confirmation and validation. We'll be able to control this FOMO, the fear of missing out. So once you have your trading plan, stick to it. Okay, don't fall from it. All right, now I'm gonna start sharing my chart. Hold on for a second so that I can change screens here. Okay, hold on for a second. Alrighty, let me just get the sharing now. Okay. So in front of you, you should be observing my charts. Before we get into the charts, let's take a look at the economic calendar to see what is happening. So for today, we really don't have much in the States. Tomorrow, we do have a pretty strong day. We're going to be seeing the CPI tomorrow. So the CPI, the consensus is for it to come month over month, 0.2%. Anything higher than that, we will most likely see some volatility. So this week ahead, we will have the spectacle of economic data on inflation, on retail sales, and consumer confidence. Now that comes on top of earnings from the likes of Cisco, John Deere, and CoreWeave. So all of that will add insight into how the economy is coping with President Trump's tariffs and how corporate earnings will pan out in the quarters ahead. But the power struggle is to watch is the one between Trump technology companies and China. Chip makers NVIDIA and AMD have agreed to give the White House 15% of revenue from sales of AI chips to China. So we've seen a pretty strong move on the market so far, pre-market, but we'll see that in a minute. The Wall Street Journal reports that it is extraordinary and underscores how the president is squeezing big tech from two sides. So I also understand that there's going to be the deadline for trade talks, which ends tomorrow, but that could be yet extended. So it's being pressured to open up. U.S. is pressuring China to open up its mineral resources in exchange for the possibility of buying U.S.-made ingredients for artificial intelligence. So we understand that from that particular move of our artificial intelligence is what we have seen the markets. Now let's go back to the markets and and start talking about the markets. So from that particular scenario, let's start with a naked chart. All right, and let me go to a daily chart. All right, so here on this daily chart, we've seen how the market, after making that particular drop at the beginning of the month, it has been able to rally and almost reached its all-time high on Friday. So the momentum on Friday was met with great expectation. We reached both of our targets of resistance, which make it that when I use the levels of support and resistance, those are targets, because you're saying to yourself that as the market progresses to the upside, you're looking obviously for opportunities to come in and buy the market. So we understand that we are in an uptrend. Okay, we basically are in. Today we started the week in the red. Obviously, after having such a strong move, profit taking was taking place. So this candle closed at 23,764. This one opened at 23,758. So meaning there was a slight gap down. It has been closed, and the momentum continued to push lower. So again, taking a look at the chart, we want to look towards our left and see that this particular all-time high will be our target if we speculate that the market will continue to push higher, right? So if we want to come in and at least measure Friday's move, okay, we could come in and use our trend-based fib extension from the low to the top to the low that we have so far. And using this tool, we see how the golden proportion of 0.610, in this case 61.80, is sitting right below our all-time high, the level that we have chosen. So this could be taken as a confirmation of that level to be used, and then obviously from that level, anything higher than that is just basically whatever you choose, because there's no history above that level. You could also perhaps use initially the 23,800 as a psychological value, and we could use that. Let's just use it for today, for this morning. Okay, first we want to be able to see that the market is going to continue is push higher. All right, another thing that you also want to keep in mind in technical analysis is it is said that when you start a week, when you start the week, depending on how Friday closed and how Monday closes, then if Friday closed on the green or high, like we've seen, and today we close also in the green, then we most likely will have an up week, so a bullish week. All right. Now the case here is obviously this could be profit taking, like I said, right? Also, basically the news coming out of the White House with with NVIDIA and AMD willing to give 15% revenue to the government from their sales, from the chip sales to China of that particular model. So that could be the case. Now, if when it comes to support, I like to use psychological values. So 23,600 is something that jumps at me. And then taking a look at previous swing lows, I could also use Friday's swing low. is a possibility that the market will retrace. If it does continue to fall, it'll retrace, and through these levels it'll find support. So far as we see that the Nasdaq is really reflecting and addressing most of the MAG AI related trade relative to the equal weight version of the S&P 500, we could speculate that if the market does have companies reporting strongly, it could lift the asset, the index, but because of the geopolitical uncertainty and whatnot, we could probably just see a sideways trading for now, just choppiness, just consolidation. That could be the case in the Nasdaq. So in the S&P 500, as you look at it, the S&P 500 on August in history, it has shown us that the market has retraced. It has entered into consolidation, and we've seen that right now. It basically it's been flattened. We don't see those green candles from that low created by at the beginning of the month like the Nasdaq has. So we could probably just speculate. I'm gonna speculate that the market, rather than continue to move higher, it could probably do a pullback. How deep of a pullback can it be? Well, we could probably see 6,100 if we do happen to break the 6,300 level, right? It could retrace all of that. But for today, I'm gonna leave my levels that will make sense. So that all-time high for resistance and 64.40 psychological. Then as level of support, I'm gonna come over here and take a look. If I use 6,400, will enter into confluence with a previous level of support. It doesn't, but it's psychological, so I'm gonna use that anyhow. And then the Friday swing low. Let's see if that will be the case for us to come in and catch a bid on the S&P 500. Now Dow has more of a sideways trading scenario. Basically last week it stayed within a range, within a pretty narrow range. It did have some on Thursday. It has some pretty wild swings, like on this candle, but yet it doesn't. It is not showing us that it's ready to break out. So I'm gonna select 44,450, and then that swing high, which sits right above a psychological value. And as far as support goes, well, I'm gonna select 44,200 ish as a possible level of support, and then that Friday swing low. Now you could also come in and find the typical price for Friday, which is basically the typical price is by adding the high 44,381 plus the low 44,079 plus the close 44,343 equals divided by 3, and that will give you a pivot point, or the typical price of Friday. In this case, it's 44,267. So 44,267. Let me just clone this line here, and let's change the color of it, make it yellow, and type in the coordinates for it, 44,267. So we can come in and speculate that when you use this particular typical price of Friday, is that where the price will most likely trade around. So if the market is above it, if the market does a pullback, we could speculate that the market will rebound, do a reversal around this level. And if it happens to continue to drop, then a next retracement or pullback towards that now resistance will be the level that you could come in and speculate that will be where the market will come. So that's just a way to find a pivot point, and just find out a level where you may have be able to use it to identify a possible entry or possible take and sell order, depending on how you enter the market, if you enter the market. All right, so crude oil actually today has done a pretty strong move to the upside. It was speculated to continue its previous move to downward. It's been a sell-off really all last week, but today it did open a gap down because this candle closed at 63.70 and this one opened at 63.57. It was closed and momentum to the upside is being favored right so far for now. But it could be all of this because of what obviously we have that meeting on Friday between Trump and Putin. Also, there could be just the essence of the OPEC Plus meeting last week. They were saying that they were going to be cutting their production and whatnot. So it is just a basic rebound after a strong sell-off. So let's just use a tight range. I'm gonna use the same levels of support that I have last week. Keep your eye on volume. All right. So you want to be able to see that. Here's one thing that I like to share with you. And when you have volume, and for example, you are able to catch it. Let's say, for example, that this candle wasn't green, it was red, right? And you started seeing that the momentum, the fluctuation was changing, and you were able to catch when volume changes from red to green. Then if you're able to catch that, you will see on the price or on the chart, the candle, that the body will start to increment or it will start to rise. So that will be an indication for you that to say, okay, so since we need volume to trade, because that is telling you that participants are being added, are entering the trade, and the direction that the change from red to green tells you it's a bullish momentum or it's a bullish scenario. Then you gotta have your obviously your entry points and take a trade, buy and just continue to see how the volume column continues to increase, and just follow. That'll be your trigger point. So you always gotta have everything set up before, and then keep that in mind. Look at volume. Okay, so now I'm looking to buy crude oil. Nat Gas, it opened strongly gap down, but even though it opened quite gap down, because this candle closed at 295 and this one opened at 2.86, so and this is a pretty wide gap and it has been closed. That tells you, right, that the momentum behind this move to the upside is strong. So you should consider entering, looking to buy the asset. So as far as support goes, I'm just gonna contract the chart and see to the back of it. We don't have, see how far back can we find some previous levels of resistance that now are obviously levels of support. So in this scenario, oh boy. All right, so this scenario could be one place for a second. All right, so this, okay. So I'm gonna use 280 psychological because there was just nothing much there. And then as far as resistance, well, $3 is psychological. That's a target, right? And the second target, the second level of resistance, we can use a swing high from Friday. So right now, the momentum is to the upside on Nat Gas. So going with the momentum. All right, let's take a look at gold, because gold has declined. So you probably are going to start reading and listening, hearing about gold prices falling from record highs. And this comes after the White House announced plans to issue an executive order addressing what they're describing as misinformation about potential tariffs on gold bars, in which they're talking about a 39% tariff on gold. Now, if that would have been applied a year ago, that would have been about 24 billion worth of tariffs from Swiss gold alone, right? And that changes the price of dynamic of gold. So there are three legs of gold trading in the world: Switzerland, London, and New York. And if you make gold more scarce, it's finite. is going to push the price higher, right? So it causes disruption and uncertainty, and has pushed gold higher. Obviously, at first, last week we came in and met our initial target, which was 3,400, and surpassed that, and then actually our first level of resistance was 34.10. We kissed that. We were about $1 shy away from that, and from that moment, price of gold has retraced. But basically, because of this news about Trump putting tariffs on gold bars, that'll be something that we need to be obviously very be following that through. So let's see how much has this move today been enough of a retracement, right, from that high because of this news. Is this already priced into the market, or are we gonna come in and find more sellers of that? But gold, because geopolitical uncertainty is still on unknown. Will we continue to fall into safe haven assets like gold? Is the dollar index going to continue to get be losing ground, or is it going to appreciate and put more pressure on gold? So we gotta obviously also be watching dollar index. We'll do it in a minute. So second level of support, I'm gonna look back over here, and this, where this candle closed and this one open, that to me is a level of interest. So I'm gonna use that. Okay, and then resistance. Well, such a wide bar in this session that I'm gonna do the same levels that I had last week on Friday. So initially looking for a recovery. That's a dip, buying the dips on gold. So that could have been a good opportunity. Silver's a following trend of gold. So I'm actually gonna bring down my first level of resistance to 38.5. Basically, Thursday's swing high, and then the second level, I'm just gonna use 38,700. Now we have a swing low. The market penetrated a first level of support that we have placed last week. That was from last week. But the second one wasn't met, so I'm gonna leave that second one alone, and then I'm gonna choose also a previous swing low, and that will be basically all the way back to Tuesday, if I'm not mistaken. So initially, the market is looking to it's pulling back nicely. So if you happen to take a trade, $38 will be your initial target as the market recuperates or retraces what is done so far in the London session. Copper had a nice move to a breakout to the upside on Friday. It hit a first or two levels. Today it opened gap down, so that has been closed, and the market continued that trajectory. So we gotta keep that in mind. Okay. So as far as resistance, I'm gonna use 446 initially, and then 450, because the market does happen to recoup all of this momentum to the downside, and we are able to catch that moment when this column of volume changes into green, and we should be off of, like we already off of the oversold territory, and then we could contemplate the idea that the market will break out, but it has been on a range last week. So let's see if that will be different. So initial support for today, I'm gonna use today's swing low. That's gonna be of interest to me, and see if the market will reverse from that. And then this doji, the swing low of this doji, that could be the second level of support. So initially looking to buy this movement to the downside. All right, Bitcoin. Well, Bitcoin just took a strong move to the upside, parabolic move. So let's see if it'll reach again that swing high from today. Support, I'm gonna leave the same levels as last week. Bitcoin moves by thousands. So this candle opened at 118 and it had a high of 122. So that's why I keep such a wide range of levels on Bitcoin to be easily met. All right, let's take a look at the currencies. The dollar index seems to be also putting some pressure on the currencies. It had a swing high just earlier. So let's see. I'm going to use that swing high for today's first level of resistance. And then 117 psychological value. So looking if the currencies market does recuperate, then if this swing was just profit taking or just a knee-jerk reaction, or is it going to be sustained and the market will basically rebound up around the 116 psychological value, which is basically our first level of support. Let's see if it do that. So looking to buy. Then we have the pound. This levels are quite high, so I'm gonna put it to a 50-cent move, and then 135 resistance, same level of support of last week. Let's see what will the pound do, and the dollar index will tell us, because if the market does recover and just fluctuates above our first level of resistance into 90.5, then we'll see more pressure applied on the currencies and on the metals. That is for sure. Okay. All right. Now that we have entered and looked at our levels of resistance and support, let's take a look. Let's go back and then digest the fluctuation. Let's take a look. Let's take an hour look into the market and see what has been happening in the last few hours. All right, so in the last few hours, we've seen that the market has basically just been in range, right? Basically has been in range, waiting for the catalyst to show a momentum to the upside, or it is getting ready to make another leg down. So if you're aggressive and you believe that this momentum or this move to the downside is going to continue, your initial target, if you sell the market now, your initial target could be this doji or inverted hammer, if that would be the case. So that swing low, 23,668. Okay, but then again, the market could just retrace, just found its bottom here, and then just looking to make a move to the upside, 23,750 initially, which is basically the previous hour's range or the swing high. Okay, I said 23,755. So that could be, you have two ways to look at it: either short that swing low, buy that swing high initially, right? All right, so the market is open. That was the bell. Do you got any questions so far for me? Does anybody have any questions? Any comments? Okay. All right, so the market has opened. Initially, we want to be able to allow the market to settle. And how much time do we need that to be? 15 minutes, half an hour, an hour? Some people wait an hour for the market to settle and find that range. So if you're more aggressive and want to start trading, 15 minutes, 15 to half an hour could be the case. But obviously, when the market opens, things start moving along, and we'll see volatility, being spiking. So let's see what will happen in this. Let's go on to a 5-minute candlestick. If you are a day trader, okay, not a swing trader, but a day trader, a shorter time frame means less risk. Okay, so in this scenario, in this 5-minute chart, we're seeing that the market is basically in range. It's gonna break out, doing a coffin of congestion and consolidation, as I call it, and a breakdown or a breakout is what it seems to be a breakdown that is happening. So again, the levels that you want to start looking for, if you enter short, psychological values, 680, 660, Could do 670 if you hit initially 690, then just follow through. See how the candle, the column of volume is spiking. The RSI is dropping strongly. Well, once it reaches the oversold territory, will it reverse? Let's see what could happen. Initially, again, see 670. If you look at the left, it's a level in this time frame that it has been met 3 times, once, twice, 3 times. So it stay there. It's rebound off of that 3 previous times. Does that mean that if the market fluctuates towards that level, is it going to find that support again? That could be the case, right? That could be the case. How long did it take to get there? Did it take it 1 candle or 4 or 5 candles? Okay, so because if it took it in 1 candle, then you understand that momentum to the downside is strong. Okay, and it could just trigger off other sell orders, and more sellers will come in and continue to push, just jump on the slide and just continue to push prices down. But if it took it 4 or 5 candles, then you understand that there are buyers looking to sustain prices higher. And so at a moment, who will lose that battle? Will the buyers or sellers? Right? And obviously we want to be able to use other indicators of momentum indicators that we have available on our side. Some of them here is where I'm going to start adding those indicators. So we have the Bollinger Bands, right? The Bollinger Bands are 2 standard deviations. So we understand that if the market happens to already, like in this case, it has fluctuated outside of the band, and if this movement to the downside is strong, right, then as the market pushes, retraces back, we could use the lower Bollinger Band as a level of a resistance, and that could be an entry. Okay, that's one thing. Then you may want to add a movement to see how or where the market is finding the direction of the market itself, if you will. In this case, the 50-day moving average is right across our swing highs. So we could come in and determine that, all right, so the momentum to the downside is being built up, because we do have a 50-day moving average above the market so far. And the market is just basically retracing. The volume moved, new candle. It hit the oversold territory, the RSI. Sorry, now it's cleansing back in. So those scenarios are also an opportunity for you to come in and take a trade. If you see the RSI dropping into the oversold territory, and then you see in reversing, and once it crosses the 30 line, you could enter a trade to the upside, obviously. Okay, then to the upside, if you enter the trade to the upside, how much of all of this is going to retrace? Well, hey, let's use the 50-day moving average as a possible level of dynamic resistance. So 23,720 is a psychological value. So if you don't want to wait for it to hit the moving average, it could be that part, right? That level. Now, does it mean that this momentum to the upside is strong enough to sustain the price around to the upside? Well, that's why you gotta be a quick trigger when it comes to day trading, because day trading is more also very similar like scalping. See, but scalping, because you do it in short intervals, right? So you enter the market and you exit the market. You cover the spread, you cover commissions, and you make your percentage in profit. And that could be done in 1 minute, 4 minutes, 5 minutes, right? Day trading, you could say, okay, I'll enter the trade and hold it for 15, 20, but before the day ends, before the market closes, I'll get out of that scenario, out of that trade, and see how at the end how it went. If you're not stopped out, then you most be likely be in profit. Now there's some cases that you could probably just be lingering, break even, but then again, you most likely wouldn't be holding that position that long anyhow. So it is the different aspects of how you want to trade the markets. So in this 15-minute window that we have in here, we could see that the market wanted to push lower, but before reaching this level here, it found support, buyers, and now we have the war between buyers and sellers. Buyers trying to sustain the price around this spot, and usually instead of pushing it down. One thing that you may want to take a look at when you trade in the Nasdaq is the crude oil. How is crude oil? What's crude oil doing? So there's a inverted correlation between crude oil and Nat Gas. I mean, I'm sorry, and Nasdaq. And that means obviously when the market, if you look at this candle at this time frame, is a green candle, and that same time frame is a red candle for the Nasdaq. We have a green candle here in the Nasdaq, and we have a red candle here on the crude oil. So you could use this particular correlation to your advantage, right? If you are able to capture it, that the crude oil is beginning to fall, to start moving strongly, you could come in and take a look at entering the Nasdaq, for example, right? Obviously, you want to have your trade setups and whatnot, but that's an opportunity. That's a way for you to measure the impulse or the momentum that the Nasdaq is having to the upside or downside. Okay, so you could take a look so you don't have to be back and forth. Well, for a reason, there's a change percentage, always a change percentage or the change in value. So as you see this particular move value dropping, right, you should see this going higher. Okay, so that's a possibility. So 720, will that be met in this time frame, in this candle? We still have 30 seconds left on this candle, and perhaps it'll get close. Let's see how close could it get. It was still pushing higher, pushing higher, pushing higher. So 720 is the initial target, psychological, and we didn't hit it in this candle, but we got quite close to it anyhow. Okay, boom. So this candle had a high of 23,717. Okay, I mean, you're still in the trade, because if you're still saying, okay, I'm gonna hold my target at 720, and I'm already in the profits, so I'm moving my stop loss. The only time that you want to move your stop loss is when you are in profit. Okay, so let's say for example you took this trade and your stop loss was lower than the swing low. Okay, well, once you're in break even and you're in the money, you drag your stop loss above and just drop it. So as the market retraces, you don't have to wait for it to come all the way down to where it's at. Let's say for example at 23,700, it'll take you out right there. And then let's say for example the market does continue to move higher and it fluctuates above our moving average. Well, you drag your stop loss also, continues following like a trailing stop. If you put the parameters, it'll do that for you also. But here you could do it manually also if you want to. So in this time frame, we almost got to the 23,720. We're still pushing higher. We saw the RSI dipping into oversold territory and then taking a strong move to the upside. We saw volume incrementing, right? And now we have here the volume in the red. And let's see in which moment does it changes to green, if it does change to green. And when that change happens, how much of an impulse will have behind it to actually hit our target of 720? Or is it now going to just retrace as the volume also increments in the red? So basically sellers, right? So that the moment that the buyers overtake sellers, and that's when the volume changes color from red to green, that gives you an indication of price action, right? So like so, it has been green. So you see how the price moves higher. So there's momentum being built. Now, how much of momentum is it being built behind that move? And it took us all the way to the target, because we saw that change. We were watching the market, and we saw volume change from sellers to buyers, and that change, the momentum to the upside, was enough for us to hit our target and some more. So and then we continue moving, pushing higher. That's your indication. That's price action right there. We hit. It was the moving average, right? Initially, well, that was the ultimate goal target in this 5-minute candle. So we hit that target. Now, are we bullish enough to continue moving higher? Well, if you see, we're about to have a moving average crossovers. So we have the yellow line is a 50-day moving average, and the blue line is a 20-day moving average within the Bollinger Bands. That's the medium. So if the 50 crosses the 20, that will be also another bullish indication that this momentum is strong enough to hit 740. So let's see. We still have a minute left in this candle, and 740 could be met. I mean, the market could also just retrace. But can we now say that we are up into 15 minutes of trading, and can we say that, okay, in this time frame, the market actually already came and found its bottom and is looking mighty strong to continue its push to the upside? Well, you see how volume here hasn't been able to meet the previous volume. That could be as an indication where sellers are coming in to absorb all of those buyers. But also you have to understand that if this momentum to the upside is strong enough and you enter in a buy, how do you come out of that trade? A sale, right? So that was a sale beginning. Influx came in from the same buyers. They want to take profit, so they got to sell it, right? But the momentum or the volume, it was strong, but not strong. It didn't meet as much as the previous candle or the previous column. So now we are into our third candle, looking for support. So if the market happens to retrace, to do a pullback here, like so, that right there is a reversal, right? We have the moving averages in confluence. So that would be a strong place for the market to rebound off of if it's going to continue to move higher, like it's doing so. Now, but if it penetrates that, right, then we could come on and say that, okay, so the market is ready to fall and just retrace most of this movement like it's doing so. And our target could be previous swing lows, right? Open, swing low, volume incremented, RSI just turning direction. The 50, you can use the 50 marker in the RSI as an indicator that if as the RSI progresses higher and it crosses the 50, then you say, okay, momentum should, if this momentum to the upside is going to be sustained, the RSI should continue to move higher because it just crossed a 50. So implying the momentum is beginning to build up, and you should see that continue to move higher. Now, if you see that turning and falling, then you say, okay, well, I want to assume that we have found a level of resistance close to a psychological value, and therefore the war between the buyers and sellers is beginning to happen. So is the price going to stay close to what could be this pivot point of the confluence or the crossing of the moving averages? And that's what it's showing us so far, right? But here we have the RSI looking ready to just spike higher. Volume has changed, it's still red, but now it's red. Let's see if if it changes into green, will it be able to move higher and just hit that 740 and more, or reach the upper boundary band. Okay. Now another indicator that we can use. Let me just add it here to identify highs and lows. Dungeon channel. Dungeon channels, just turn off the boundary bands. All right. So the dungeon channels can also be used to identify highs and lows. Okay. That's what a dungeon channel basically does. It'll show you the low, it'll show you the high like it did so here. Okay. You could take a look at the dungeon channel and then apply the Bollinger Band and see where volatility is reducing or amplifying. So you can come and say, okay, so if the dungeon channel has given me this level to be a level of resistance, a level where the market has come in and just bounced off of it once, two, three, four, five times in this time frame, then therefore if the market is showing me momentum to the upside and the Bollinger Bands are within the dungeon channels, we can say that the bands are squeezing, right? And when we have band squeeze, it'll break out, it'll pop out. So the direction of the market will be what? If we are above the medium, then we could contemplate that the breakout will be to the upside, and so we could use the target, the dungeon channel, as a target. Or vice versa, if the market happens to do a breakdown or break down, then we use the dungeon channel as a target. All right. So then we have that. Now the momentum to the upside is being built. RSI is pushing higher. 740 is initial target. And let's see if we are able to reach that target. Any questions? So anybody has any questions, any comments? Okay. All right. So now we are in a new candle. All right. We've created a zone in this 5-minute chart where the market has basically found some resistance to continue to move higher. But we need to obviously break out of that particular range. And in this time frame, we are making an ascending triangle. Okay, so as an ascending triangle, let me see. All right, we can come in and measure the entry and just place it above or below. So let's say, for example, if the market happens to break out of this ascending triangle, we can come in and contemplate that it will hit, it should trade outside of the Bollinger Band and towards the doji channel. But if you see, that's a good range. And if it breaks up to the upside, well, it should hit a psychological value of 760 and continue even further out, outside of the Bollinger Band, outside of the doji channel. If let's see which way that it breaks out. We still have time, so 3 minutes, and it's looking to break out to the downside, to break down. Let's see if it does. Let's see if we are able to capture a change in volume into the green. How the RSI is curving. Okay, so momentum to the downside is actually being built. So once we fluctuated across the 50 below into the 40s, then we should see this movement to the downside being incremented. But hey, this could stay here, just choppiness, just sideways trading, just stay here and finding obviously a catalyst to show us a direction out of it. Let's see where it go. We clone this line. The other one. see. Let's see if in 2 minutes the market will actually break down, and those are the targets if it does, or will it break out to the upside, or would it just stay here? They're ranging, just basically doing what it's doing so far, choppiness, just a lot of whipsaws, just no direction, just waiting, obviously, for that big order to come in and just take the market either out, break it down, or to the upside. And we still have a minute 30 left here, and something's gonna happen. Something's gonna happen from here. So it's showing us signs that it's gonna break down. RSI is pointing below the 50. Volume is incrementing, right? And it's breaking down. You see, we got a minute left. So it's broken out target all the way down, all the way to low, or we could use the Bollinger Band, the lower Bollinger Band as a target, or this level here, or the Dungeon Channel low. And we still have 50 seconds left on there. Okay, and let's see where this candle will close, if it's going to continue to move lower. We got 30 seconds left, and it's pulling back. Volume is incrementing. RSI is still below 50, but the candle is just retracing, or it was retracing. 9 seconds, 8 seconds, 7 seconds, 5 seconds, 3 seconds, and it's going to stay within range. All right, so it broke out. And let's see. You'll see if it'll continue to move lower or not. All right, let's take a look at the other assets, see how they're doing. All right, so let's take a look at the S&P. All right, in this case, in the S&P, it actually did hit the downtrend channel. Dow, the Dow had a much stronger move to the downside. Crude oil, so crude oil also having within just ranging really. Nat Gas breaking down, so will it continue to its trajectory lower, crossing the 50-day moving average. Gold, all right, so gold, it spiked, it recovered, and it's moving along. So it's walking the upper Bollinger Band, and the Dungeon Channel is showing us obviously the highs. Silver also looking to make a little move to the upside. Let's see if he will do it. Copper, sideways trading, ranging. Ooh, great setup for a possible breakout. So this, will it break out or break down? Bitcoin. So Bitcoin, after picking its head above 120,000, it's retracing. Let's see how much more of a retracement will it do. Will it come all the way down towards this level of 119,500-ish? You see how many candles are basically close to it. I mean, the swing lows are also very uniform, same levels. Euro, pressure being applied to it. Dollar index seems to be gaining ground. The pound looking to sustain itself north of 134, because the dollar index, actually the dollar index is taking it 3 candles to retrace what it didn't want. So that could be just another opportunity, or seeing that it could just pop out, break out of this range towards the 98.35 level. Take a look at NASDAQ again. All right, so NASDAQ, after breaking out of that ascending triangle, is looking to move higher. So 740 was met, but obviously that would have been a completely different trade. Last run for the assets. S&P looking mighty strong. Dow target will be the pivot point. That would have been a reversal trade. Nat Gas sideways trading. I mean crude oil. Sorry, sideways trading now. Nat Gas. I think Nat Gas is. I'm gonna speculate it's getting ready to fluctuate lower. So selling Nat Gas. All right, gold climbing again, breaking out of the swing lows. So I didn't follow gold as closely as before. All right, silver also getting ready for a breakout. Copper, hey, breakout, and there he goes. There he goes, breakout. Bitcoin just looking to sustain itself around that 119, and the euro will 116 be its level of support. 134 for the pound. Well, if the dollar index continues to move higher, it will be. All right, guys, that's it for me today. Thank you very much for watching. I will see you again tomorrow, same time, 8 o'clock New York, half an hour prior to the US Session Open. And if you have questions for me, thank you again for watching. Hope you learned something. Every single day we'll use different indicators, apply different strategies, and just looking